Hello there. You've just landed on the YouTube channel of your asset protection pastor. Thank you for stopping by. And while you're here, I need you to do me a quick favor. Click on that subscribe button down below for more videos like these. In today's video, I want to talk about the difference between life insurance and death insurance. Have you ever heard that term? That is in the life and death is in the power of the tongue. Well, in an insurance, life and death could be in the power of the ink pen stroke, the signature. So which plan you choose. Now, what am I trying to say here? I'm glad you asked. Okay, so let's just dive right into it. In death insurance, think about like a term life or final expense type insurance, whereas in a term life insurance policy, it'll go from 10 years up to 30 years max. And so at the end of that term, if you outlive that policy, all of the money you paid into it is just a total loss, unless you choose an option like a ROP, what we call return of premium, which means that all of the money that you paid into that policy, you'll get it back at the end if you're still alive. If you pass away now before the end of that policy, then what ends up happening is that the insurance company will pay a death benefit. For example, if the policy is worth $500,000 and the policy is on you, you died before the 30-year period or before the end of the term that you agreed upon, then the insurance policy will make good on its face and pay the person who is the beneficiary or multiple people that may be the beneficiary. In a final expense, then the final expense is a lot smaller policy, usually up to a maximum of about $45,000. They are more costly. Now, in a final expense life insurance policy, they know that you probably have some health issues and can't get insurance, so that's why they cap you off at that amount, and it's a lot more expensive. For example, $45,000 worth of life insurance on a person who is, let's say, 50 years old. That $45,000 policy could cost them $160 or $200 a month. That same 50-year-old person who is in better health and they decide to go after a term policy, then they'll get it much cheaper than they would for a final expense policy. It could cost $100 for $300,000 worth of insurance. So that's kind of the difference there. And then on the flip side, conversely, you have what's called life insurance. And a life insurance policy, what you thinking more of things that you could use the policy for while you're still alive. For example, let's say an IUL policy. And an IUL, which is an Index Universal Life Insurance policy, you can borrow money from that policy and use it to pay down debt, to make a large purchase, medication. Maybe you want to use it towards tuition and things like that for your child is in college. Or maybe you have a son or daughter that's getting married, or you getting married, and you want to use it for a wedding or to buy a car or to fix your house, whatever. You can pull a portion of that money out of the Index Universal Life Insurance policy, which you can then in turn use while you're alive. So let me see a show of hands, or better yet, put in the comments if you would be excited about having a life insurance policy that you could use while you are alive, that you can borrow money from. Drop it in the comments. Let's have a conversation and just see what more people are wanting to hear. Now, if you're that person that's super excited about dying so that you can leave a large lump sum of money to your family, put that in the comments as well. I'll be interested in hearing both. Listen, that's pretty much all I have. I hope that this has added some value to you. And if so, be sure to hit the like button and come again for more videos. In the meanwhile, I look forward to speaking to you on the next video and many more to come. Meanwhile, take care of yourself and each other. We'll see you soon.